What's going on, everybody? Welcome back to Dirty Degens. I'm your host, Josh, and today we are going to listen to Powell speak. So he should have some good things to say. Sorry, I'm also just trying to get this other stream going. And yeah, if it's not one thing, I swear it's another. But Powell's speaking for the first time in a little while here. Also, the first time um, since Trump announced that they're actually looking to replace him. So that could also cause some issues for him there. Man, why won't this work? Starting one sec. Oh man, I cannot figure out the arena to save my life. Yo, what's going on, Black Satoshi? Hope you're doing well. Technical difficulties over here. Not for YouTube. YouTube's going great. Win GA? What do you mean GA? All right. Sorry, I'm. Oh, giveaway? Uh. Oh yeah, that's right. I didn't end up going live. I'll do that this week. Um. I might just handpick it. We'll see. But I'll do that this week. I've did the one. I think I've just got one more I've got to do. Okay. Also share audio. Window. We want. All right, sorry about that, everybody. All right, I've got it going here. Just getting multiple things set up, two streams. All right. Powell actually, the time just got pushed back. He was supposed to start talking in a couple minutes here, but unfortunately, the time got pushed back. But we're going to hang out anyways. Let's see. Why won't my camera come back on? Let's see. Well, camera's not going to work on the arena apparently, but that's fine. Hopefully you guys can hear me okay. Let's dive into some Bitcoin stuff and things like that. We'll check out the market while we're waiting here. So we do have Bitcoin is going through a nice little pump right now leading up to Powell speaking. So that's nice to see at least. Hopefully that holds. But Powell could cause a little bit of volatility. A couple reasons for that. One, this is his first time talking since Trump did come out and say that he wants to replace him. I've got an echo. Hopefully that fixes the echo that I had apparently. But yeah, so Trump could cause a little bit of volatility here. We'll have to see what happens. Or Powell could cause a little bit of volatility. Sorry, I'm all mixed up apparently. And then we've got the tariff news, and they're not working quite how Trump had hoped. Sorry, I've got to switch through here. They're not working out quite how Trump had hoped. He was hoping that this would bring in, like, I think it was supposed to be around $1.5 billion so far due to the tariffs and revenue, but it's actually only about 500 million. They're saying they were saying that the $250 million a day was actually an error. So that didn't work out. But Yeah, so tariffs are not going to have as much of an impact on revenue as Trump has hoped. But hopefully, a lot of them end up getting resolved anyway because obviously it's not good for anything going on. And also, if Trump wants Powell to cut rates, he's not going to do that while there's all this economic uncertainty. One day the tariffs are 10%, then they're 130%, then they're 10%, now they're 245%. So it's all over the place. So Powell doesn't know what to expect. So therefore, he's not going to make any serious decisions right now. Right? He's going to just sit and wait. That's ultimately what I expect from him. I also don't really expect him to comment on being replaced. He's probably going to say, I'm here to do my job. And that's about it. He typically doesn't comment too much on that. So we'll have to see what he ends up saying. It looks like we have, so we've got about 15 minutes still until he talks. So unfortunately, they definitely increase the time, but I was already set to go live at this time, so I did not want to not go live. Let's see if I can do this. Maybe if I trying to see if I can fix the nope, that doesn't work. Trying to see if I can give the arena a better view here, but it doesn't seem to want to work. So we'll just leave it on this page here. And hopefully you guys will be able to hear it. You should be able to. But if anybody over on the arena has any comments, anything they want to talk about, we've got quite a bit of time here. So go ahead and throw them at me. Let's chat a bit. Also, I'm going to message Armando and see why he lied to me. Maybe Armando will have an answer for me. I'm trying to multi-stream. Hey, SK Yeeson, hope you're doing well. Good afternoon. But I'm trying to multi-stream to YouTube and the arena, but none of my software seems to want to take arena stream key and everything like that. Typically, you're able to see me. I'm not here hiding or anything. Look at that. Might have figured it out here. So if I stop screen share, boom, you can see me now. It's not perfect, but this will work. We're making progress. But hope you guys are having a good afternoon. Obviously, I was here just a couple up. Now my arena stream ended. That's wild. Okay, well, I'm back. Sorry about that, everybody on the arena. For some reason, it just decided to end for no reason at all. Let me make sure you guys can hear me okay. Okay, so now we just need to make sure that you guys can. Got to make sure that you can actually hear the stream as well. That is what's important here. So that should be this. Make sure you guys can still hear me. Let me know if you can hear me now. You should be able to, so just let me know. Perfect. Sorry about the issues. Day one, streaming on the arena and multi-streaming it, so we're getting there. We're going to figure it out. We still got like 13 minutes until Powell talks. I don't think there's anything really coming out in terms of news right now. CNBC's been pretty quiet today. CNBC just posts a lot of news. I'm not necessarily a CNBC fan, but what I am a fan of is the market's doing well. Now my browser's crashing. What the heck? This is a catastrophe. My TradingView tab crashed, that's why. Or it's just TradingView in general. This actually happened the other day where TradingView just kind of went down for everybody. Because it is very laggy, but still holding 85. I imagine that we're going to have a good bit of volatility once this guy opens his mouth. Cartman wants to be the new co-host. Nah, I'm flying solo, man. I'll have guests, but I'm flying solo. Did a year with a co-host. Love Scott, great guy, but I'm just gonna fly solo. You guys got any projects you're keeping your eyes on? Anything you're looking to pick up? Any new gems that you're finding? I'm interested to hear them all. Well, at least the stream seems to be running solid over on YouTube. Hopefully, it'll be all good over here as well. Let's see. Settings. Let's do a little test over here for you guys on the arena. Let me know if you can hear this. Should be able to hear that. Let's just make sure. I gotta make sure that you guys can hear this. It's very important. Are you guys able to hear that on the arena? Perfect. You can hear both. That's good. I'm not going to be talking while Powell will be talking, so you should only be able to hear one of us anyways. So as long as you can hear what's coming through, that is perfect for me. I also had the music quite low. Now I'll fix it for YouTube over here. You guys having a good afternoon, everybody? Looks like we've got a few people watching over on YouTube, but we got a little bit more over on the arena. So just need Powell to start opening his mouth and get this show on the road. Let's see how AVAX is holding up. I called it out earlier that we might have a little, yeah, this buy signal right here. It's been up ever since. AVAX is going to break 20. That's like, it's actually a far bit up. $20 is where this EMA is. Maybe it'll, if it manages to go up a little bit higher here, it'll switch into bullish momentum. Yeah, OM, that's pretty devastating. I don't know if I necessarily trust the team after that. I've read too much very bad things. So I don't trust the team too much on that call there. I'm going to stay far away from that. I'm very bullish on the RWA sector. And yeah, OM is going to be completely out of my purview. Thank you for the tip, Yusuf. Appreciate it. We haven't even gotten started yet. But yeah, I'm staying far away from OM. I know that it had a price recovery. It didn't do amazing, but it pulled back a little, or it came back up a little bit. But I'm not interested in Mantra. It's still top 100, which is crazy after plummeting like 80%. Yeah. It didn't come back up. It barely came back up. Let's do this. It's a little better. You can see it a little bit now. Switch to market cap. Dropped to 410 from 5 billion. That's insane. It's such a crazy drop. But 752 million now. I think it's mostly people that are just I guess the arena stream crashed again. That's crazy. I'm just going to give up on it. But yeah, I'm going to stay far away from OM. We'll just have to see what Powell says now. Honestly, I'm not sure that I expect him to say too much. I expect him to cause some volatility, but I don't think that he's going to be hawkish or he's probably going to be dovish if anything. But I definitely don't expect him to be hawkish. Got Powell speaking in about 3 minutes. We'll see. Hopefully, he goes live on time. I'm not going to hold my breath. He's late to a lot of these. We are just hoping for some hawkish stances, but I don't expect it. Let's see here. I guess I'll just post it over here. Okay. Minute and a half. I've got this other page too that he's supposed to be streaming on. I doubt this one. Is this one live yet? It's got an ad playing. Definitely don't want the ad. Yeah, he's not. They don't have him speaking yet. I'm just going to wait on this one. This is the official stream. Hopefully, he gives us some good news. Got any news over here? Wall Street's eating up the volatility. What about OpenAI coming out with a social media platform to try and rival X? That's going to be it's going to fall flat on its face. Federal Reserve is trying to say that college is still worth it for students. I don't think so. Just like I'm not a financial advisor, though, I'm also not a educational advisor. So go to school, do stuff like that. Come on, Powell. Oh, there we go. It's live now, at least. Might start getting some action. We got no audio coming through yet or anything, though. Let's make sure that we've got this turned down a bit. I swear, these guys are just always late. Nobody does anything about it. Hey, Maru. Yeah, sorry. I was trying to get it to work. I've restarted the stream 4 times, and unfortunately, it just keeps failing. There's a way to tie them together, but it's not working for me yet. I've got to talk to somebody and try to figure it out. We'll get it working, though. Yeah, right. It's a government. I don't expect punctuality from the government, unfortunately. Yeah, the arena rugged me hard, man. Rugged me 3 times. The first time, I was curious if it was my fault because I was typing a message and I hit enter, and I don't know if that accidentally hit the end stream button. But the next time definitely was not my fault. I'll say that much for sure. But appreciate you hopping on over to YouTube, trying to grow this channel a bit. Hey, it's coming up on 1 month old, so it's not doing bad. Definitely not doing bad at all. Powell's going to rug us. He's not going to show up. What's Bitcoin doing? Still just hanging at 85.4. We got over that EMA. That's good. Wonder if we can hold it, though. How are we looking on the 4-hour? We got over the EMA on the 4-hour, too. We really need a couple closes over that. The daily's still climbing up there. If we can get this candle to close above the EMAs, that would be very good. Yeah, right? That smile scares me. That's why, yeah, he's always just got this like dead smirk on his face, and it strikes fear into my heart. I wonder if they're actually going to be able to get Powell to resign. I don't think so. He seems too stubborn. He wants to keep his job. You know, I kind of thought this would start at like 12:30, but they had it set to go live at noon. What time will it start? Well, it's supposed to be starting now. It was supposed to originally start about 20 minutes ago, and then it got pushed back to like 5 minutes ago, and now it's started, but we're still waiting. So it's supposed to be starting. Right now, we're just kind of chatting, hanging out. Waiting for it to start and keeping an eye on Bitcoin. Let's scale on down to like the 15-minute. We're getting a little hot on some of these lower time frames. Yeah, we're looking good. What would look better, though, is if Powell started.
Once again, please welcome past chair of the club, Deborah Cafaro.
They got to switch on the camera, though.
Thank you. Greetings. I want to warmly welcome you to today's Economic Club of Chicago program. The overflow group that we have here in the room in Chicago and the countless others joining us virtually from around the country are a testament to the importance and the timeliness of today's topics and speaker. Today, we have the great privilege of hearing from the Honorable Jerome Powell, Chair of the Board of Governors of the Federal Reserve System.
He's got the world's economy in his hands.
Today's a little special, so out of respect for our speakers, and because we're broadcasting this program live, I would ask that you please remain seated and quiet during the program so that we all can gain the full benefit of Chair Powell's remarks. And now it's my pleasure to welcome my friend Austin Goolsbee, the President and CEO of the Federal Reserve Bank of Chicago.
She's shutting everybody
a renowned economist and our fellow ECC member. Austin, take it away.
Well, we're starting to dump a little bit, but not a lot.
Thanks, Debbie. It is a real pleasure and delight. Should I move that for you? To introduce our guests.
These guys need a new broadcast team. They don't know what they're doing.
Of economics and finance. First, let me introduce the moderator, my friend and professor at the University of Chicago Booth School of Business, Dr. Raghu Rajan, the Catherine Dusick Miller Distinguished Service Professor. He is a world expert on banking, corporate finance, economic development, author of numerous award-winning books, was himself as a scholar winner of the Fisher Black Prize, which goes to the greatest financial researcher under age 40. He's since over age 40, but he was the inaugural winner. He is a member of the Group of 30, and he was the 23rd governor of the Reserve Bank of India, and before that, chief economist and director of research at the International Monetary Fund.
RP, what's going on?
You probably know him as a regular contributor to the Financial Times. He speaks extensively on economic and financial issues. Please give a warm welcome to Professor Rajan. And then our featured speaker will be Jerome Powell, the 16th chair of the Board of Governors of the Federal Reserve System.
I didn't realize this was going to be a panel. I thought it was just going to be
Chair
Powell
Powell
speaking.
plays a crucial role in the country's monetary policy, oversees major financial institutions, and maintains economic and financial stability in this country. He was first appointed as a board member of the Fed by President Obama in 2012. He was subsequently elevated to chair of the Fed by President Trump in 2018, and then renominated to his post by President Biden in 2021. He has the respect of members of both parties, and I believe that no one as Fed chair has ever had to deal with more and varied challenging issues
that is true,
than Chair
though.
Powell
Powell's
has
been
had
hammered.
to deal with. From the pandemic to fighting inflation to bank runs and on. His leadership at the Fed has been a steady hand and one of the all-time greats. Before coming to the Fed, Chair Powell was a visiting scholar at the Bipartisan Policy Center in Washington, D.C. He first entered public service at the Treasury Department under President George H.W. Bush, with responsibility for financial institutions, the Treasury debt market, related areas. Outside of public service, Chair Powell has worked as a lawyer, an investment banker, and been a partner at the Carlyle Group. In addition to his service on corporate boards, he served on boards of charitable and educational institutions, including the Bendham Center for Finance at Princeton and the Nature Conservancy of Washington, D.C. and Maryland. He is a D.C. native, received a B.A. in politics from Princeton, and a
really
law degree from
Powell
Georgetown University, where he was editor of the Georgetown Law Journal. Please welcome to the Economic Club of Chicago again, Chair Jerome Powell.
They're going to have to clean themselves up after that job. All right, Powell.
Thank you,
Bring
and
the
good
reckoning.
afternoon. It's great to be back in Chicago.
I should have gone and done this
And
live.
thanks for that kind introduction, Austin. So I'm looking forward to my conversation with Professor Rajan Raghu. But first, I'll briefly discuss the outlook for the economy and monetary policy. So, at the Fed, we are always focused on the dual mandate goals that Congress has given us: maximum employment and stable prices. Despite heightened uncertainty and downside risks, the U.S. economy is still in a solid position. The labor market is at or near maximum employment. Inflation has come down a great deal, but is still running a bit above our 2% objective. Turning briefly to the incoming data, we'll get the initial reading on first quarter GDP in a couple of weeks. The data we have in hand so far suggests that growth has slowed in the first quarter of this year from last year's solid pace. Despite strong motor vehicle sales, overall consumer spending appears to have grown modestly. In addition, strong imports during the first quarter, reflecting attempts by businesses to get ahead of potential tariffs, are expected to weigh on GDP growth. Surveys of households and businesses report a sharp decline in sentiment and elevated uncertainty about the outlook, largely reflecting trade policy concerns. Outside forecasts for the full year are coming down, and for the most part, point to continued slowing, but still positive growth. We are closely tracking incoming data as households and businesses continue to digest these developments. In the labor market, during the first 3 months of this year, non-farm payrolls grew by an average of 150,000 jobs per month.
It's not a dump.
While job growth has slowed relative to last year, the combination of low layoffs and lower labor force growth has kept the unemployment rate in a low and stable range. Meanwhile, the ratio of job openings to unemployed job seekers has remained just above 1, near its pre-pandemic level. Wage growth has continued to moderate while still outpacing inflation. Overall, the labor market appears to be in solid condition and broadly in balance, and is not a significant source of inflationary pressure. As for our price stability mandate, inflation has significantly eased from its pandemic highs of mid-2022 without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. Progress on inflation continues at a gradual pace, and recent readings remain above our 2% objective. Estimates based on the most recent data from last week show that total headline PCE prices rose 2.3% over the 12 months ending in March, and that excluding the volatile food and energy categories, core prices rose 2.6%. Looking forward, the new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. These policies are still evolving, and their effects on the economy remain highly uncertain.
Yeah, he does not like uncertainty,
we will continue
so
to
that's what's bad for us.
Our assessment. The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs. Survey measures of longer-term inflation expectations, for the most part, appear to remain well anchored as well. Market-based break-evens continue to run close to 2%. So, as we gain a better understanding of the policy changes, we'll have a better sense of the implications for the economy and hence for monetary policy.
Right, so he's got to wait for the tariffs to be solidified before he can really make a choice.
At least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass through fully to prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and
This
the
is
potentially
super
different
dovish.
time horizons over which those respective gaps would be anticipated to close.
That's why we're seeing Bitcoin just dump right now. He's being
As
pretty dovish
that
now.
great Chicagoan Ferris Bueller once noted,
Ferris Bueller.
life moves pretty fast. For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. We continue to analyze the incoming data, the evolving outlook, and the balance of risks. We understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. We will continue to do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to our discussion.
Hopefully the panel's got some good questions for him that can rattle his chains a little bit, because he's usually pretty vague like he just was there. I mean, that was pretty dovish. He could have been worse, but hopefully the panel can try and get some answers out of him. Anytime reporters ask him questions,
Chair
though,
Powell,
he dodges everything
for those
pretty well.
remarks. I look forward to your elaborating on them in the course of the next 40 minutes or so. I understand last time you were here, Melody Hobson interviewed you. Well, I'm a poor substitute, but I'll try and compensate in the quality of the questions. As you repeatedly emphasize, communication and transparency are very important for the Fed. I would like to get more from you on some of what you just said. As a former central banker, the only sort of caution I've been given by the Economic Club is to not lapse into central bank speak. So I'll try my best not to do that. Let me start by saying you've guided the Fed through some really difficult events, including the pandemic, the dash for cash in March 2020, the great inflation, the banking crisis centered around Silicon Valley Bank. And then over the course of the last year, we've seen a growing possibility of a Fed-engineered soft landing. And now,
I agree. Pump the market so
like
boy can launch.
everything has
I'm so
changed.
excited for the boy launch.
In the course of a
but
couple of months,
It'd be a
JP
bad
Morgan
idea to launch
has
in this market right now,
shifted
let's be honest.
to estimating the probability of a recession this year at around 60%. What do you think about all this?
Well, first of all, thank you for being here today. It's a pleasure to be here with you. Actually, the the appearance I did here was my very first appearance as chair 7.5 years ago, so it's great to be back. And I would agree with you that it's been an eventful 7 years. Putting it mildly, I keep waiting for the 3 months of calm, that never comes. But to your question, I guess to set the stage, let's look back at 2024. 2024 was a year where the economy grew 2.4%. Unemployment remained in the low fours, close to mainstream estimates of maximum employment, and inflation came down and was running at the end of the year around 2.5%. That's the economy that we had, and I won't decide how to characterize that, but that's where things were. Where we are now, again to your question, is the administration is, as I mentioned in my remarks, is implementing significant policy changes, and particularly trade now is the focus. And the effects of that are likely to move us away from our goals. So unemployment is likely to go up as the economy slows in all likelihood, and inflation is likely to go up as tariffs find their way, and some part of those tariffs come to be paid by the public. So that's
most
the strong
tariffs are passed
likelihood.
on to the
And,
consumer,
my hope is
not
that
to
we'll
the
get
producer.
through this and get back. Well,
Hey,
we're always gonna
Asnall,
be
how you
aiming for
doing?
maximum
Thanks for
employment and
hopping
price
in.
stability. That's what we do. I do think we'll be moving away from those goals probably for the balance of this year,
Asnall,
and then, or at least not making any progress, and then we'll resume that progress as we can.
Let's talk a little more about tariffs. I mean, you recognize that some of the effects of the tariffs will be one-off, transitory, but you also have said that perhaps they will give room for a number of firms to raise prices. You mentioned dryers. When washing machine prices went up because of tariffs, dryer prices also went up in tandem, even though they weren't tariffed. What's your sense about the effects of tariffs on inflation? What would make them more persistent? And what would make them have effects on growth?
Bitcoin is not liking Powell right now.
Kind of a simple starting point is one tariff comes in that gets passed along in prices and raises inflation, but it's just a one-time thing. So the price level goes up, and that's it. But that can happen in some circumstances, but it depends on a number of things which we don't know yet. And I would point to a couple of them, or three of them actually. One is just the size of the effects. And as I mentioned, the tariffs are larger than forecasters had expected, certainly larger than we expected, even in our upside case. We looked at a range of cases. So that's one. The second one is how long does it take for the tariffs to have their effects on inflation? To the extent it takes longer and longer, that raises the risks that the public will begin to experience higher inflation. They'll come to expect it, and companies will come to expect it. So
this is exactly the reason why the Fed rate cut probability is going down so much.
Which is my remarks, which is got to keep inflation expectations well anchored. So if we have those three things under control, that's what it will take.
Yeah.
And indeed, our
it's
role
even down
is
from
to
this
make
morning.
sure that this will be a one-time increase in prices and not something that turns into an ongoing inflation process. That's a big part of our job.
What about the effects of tariffs?
Yeah, Maru, that's the thing. The short-term turmoil only impacts traders. Like if you're a long-term holder and you're trying to hold for 5 years from now, none of this matters.
Supply chain
it's all noise.
Disrupted, that firms may not be able to import their relevant stuff from China given the level of prices. If it turns into a supply shock, would the Fed's response be different than if it was primarily something which affected just prices?
So I actually had dinner at the Chicago Fed last night and with a number of directors of various parts of the Chicago Fed, and many of them are CEOs of significant companies, and they this uncertainty that they're feeling and the issue with imported components to their products is just a huge issue. But with if you look back at the pandemic, if you remember, there was a shortage of semiconductors, and that led to a shortage of cars at a time of extremely high car demand. And it was a prolonged shortage because production couldn't keep up. And that led to an extended period, one of the things that led to an extended period of inflation. So when you think about supply disruptions, that is the kind of thing that can take time to resolve. And
tariffs are definitely going to cause a supply disruption.
What would have been a one-time inflation shock to be extended, perhaps more persistent, and we would worry about that. In this case, you can look at the car companies, which their supply chains are likely seem to be on track to be disrupted significantly, and you would worry that that process will take some years and that the inflationary process might be extended. So these are all of this is highly uncertain. We're thinking now really before the tariffs have their effects, as how they might affect the economy, and that's why we're waiting really to see what the policies ultimately are, and then we can make a better assessment of what the economic effects will be.
Let's move to immigration. You talked about the labor markets being in reasonable equilibrium right now. Of course, what we've seen over the last few months, the last months of the previous administration continuing into this administration, is immigration has fallen off considerably. What's your sense on how that will affect the labor market?
So part of why growth was so strong in the last couple of years was just very high levels of immigration, and those people went to work. The economy hired them. There was a lot of demand. We were still working off the labor shortage. What's happened since the prior administration changed their policy, as you mentioned, immigration has fallen very sharply, and therefore the growth of workers has really stopped. It's really stagnant. But at the same time, demand has also fallen.
Yeah,
and
that's
so
what I was going to say.
Demand for workers, so payroll job creation has also fallen, and they've kind of fallen in tandem, which is why the unemployment rate has been pretty stable for about a year. So in a way, demand and coincidentally perhaps to some extent, demand and supply for workers has fallen. In terms of the effect on the labor market, right now we're still at full employment. And labor force participation is still strong. Wages have moved back down to levels that are now pretty sustainable, given an assumption about productivity. So the labor market's in a really good place. Longer term, the effects of immigration are not thought to matter much for inflation. The effects on demand and supply will more or less cancel each other out.
Yeah,
So
Powell's crushing
we wouldn't
the
expect there to be
markets.
a
He's
big
the doomsday
impact on
bringer. He's
inflation.
sending us back down to our 50-day EMA.
You've seen in recent weeks substantial talk about layoffs in government, as well as freezes in research establishments and universities in jobs. How soon and how big will this be in its impact on labor markets?
So it's too soon to say, but what I can say is, of course, the people being laid off in government, this is highly significant to them. We don't know how big that's going to be. Right now, it's not
I'm
big
surprised the
enough to
layoffs
affect
haven't
a workforce of
catapulted
170 million people materially.
unemployment numbers.
In terms of the cutbacks in funding and for science and things like that, we do see in areas, particularly in cities that have a lot of universities and research hospitals and research institutions, we're really hearing significant layoffs and significant impacts on employment. I don't know how much that will total up to, and of course, in addition,
It'll take like
cutting
another
back on
month before we
scientific
actually see
research
the
may have
numbers on that. They'll
implications
probably
for
fudge them. They
economic
fudge them all
growth,
the
for
time.
productivity, for health, for all kinds of things, but those are very difficult to estimate in real time.
Now, given that we're talking about the future, you may be confronted in the not so distant future with both higher levels of unemployment as well as potentially higher inflation. And of course, the policies that each one requires could be different. You talked a little bit at the podium about how the Fed would see these two and how it would address it. Just giving you a chance again to elaborate on that.
Right. So
Happy I could help you
most
make a
of the
good
time,
decision, Maru.
when the economy is weak,
I just share my
inflation is
opinion.
low, and unemployment
That's
is high, and both of those call for lower interest rates to support activity, and vice versa. So most of the time, the two goals are not in tension, and they're not really in tension now. The labor market is still strong, but the shock that we're experiencing, the impulses we're feeling, are for higher unemployment and higher inflation, and our tool only does one of those two things at the same time. So it's a difficult place for central banks, to be in terms of what to do. And so the best we can do is we
Only
actually
holders
have a little provision
survive in this type of
our
market.
consensus statement, which is the thing that we vote on to embody how we approach these questions. What we say is we will
Lots of
look
good
at
pickups,
how far the economy is from each of those two goals, and then we'll ask, might there be different paces at which they would approach those goals? We'll look at those things and think about them, and we'll make what will no doubt be a very difficult judgment. Again, we're not experiencing that now, but we could well be in that situation, as I mentioned in my remarks.
Just want to pick up on a word that is often used today, uncertainty. As a respondent to a Dallas Fed survey said, I've never felt more uncertainty about my business in my entire 40-plus years career. The worry today is not just about immediate policy uncertainty, but an entire change in the U.S.'s economic philosophy.
That's right,
not
Memo.
just policy uncertainty, so to speak, but structural uncertainty. One of the effects, as you've pointed out, of higher levels of uncertainty is that firms postpone investment. For instance, even after the tariffs stabilize, firms that contemplate reshoring production facilities will hesitate, not knowing if the tariffs will be reversed in the future, maybe by the next administration. How do you take such longer-term uncertainty into account in your policies?
Let me just agree that what comes back very strongly, and everyone will understand this. These are very fundamental changes in, long held in some cases, policies in the United States, and there's not any real experience. I mean, the Smoot-Hawley tariffs were actually not this large, and they were 95 years ago, so there isn't a modern experience of how to think about this. And businesses and households are saying in surveys that they are experiencing incredibly high uncertainty. There's a lot of research, some of it from the Fed, showing that does lead to businesses and households stepping back from decisions, which of course makes common sense. And you hope that that's something that you go through a phase, and then you know what things become more certain, and therefore, people can resume normal economic activities given their understanding of what is the new normal. I mean, your question really is, what if the uncertainty remains high? I think that's a difficult environment. I think people's expected rates of return would have to be higher. I think that would weigh on, to me, investment, just in general. If the United States were to become a jurisdiction where risks are just structurally higher going forward, that would make us less attractive as a jurisdiction. We don't know that at this point, but I think that would be the effect.
Well, let me turn to financial markets. We've seen some volatility, especially stock market volatility. I mean, the levels of the VIX are up to the levels they were in
Powell's
the
just
early days
crushing
of
the
the
market
pandemic,
right now.
coming off somewhat now.
Is he crushing the stock market
Some
too?
people believe
Yeah,
the Fed
he
will
is.
intervene if the stock market
make sure these
plummets.
numbers are right.
The so-called Fed put. Are they
Yeah,
correct?
He's crushing it.
I'm going to say no with an explanation. So what I think is going on in markets is markets are processing what's going on, and it's really the policies, particularly the trade policy, and really the question is, where's that going to come in? Where's that going to land? And we don't know that yet. And until we know that, you can't really make informed assessments that would still be highly uncertain. Once you know what the policies are, it'll still be highly uncertain what the economic effects will be. So markets are struggling with a lot of uncertainty, and that means volatility. But
Yeah,
having
let this
said
cat
that,
in. He's going crazy.
markets are functioning. Conditional on being in such a challenging situation, markets are doing what they're supposed to do. They're orderly, and they're functioning just about as you would expect them to function.
So we've seen volatility also in the bond market, and at a time when usually there's a flight to safety, we saw yields on the German Bund and the Japanese government bond come down, but we saw yields on U.S. Treasuries go up. What do you attribute this to?
So I would just say the same thing. I think it's very hard to know in real time. I've had a lot of experience with significant moves, for example, in the bond market, where there's a narrative that people land on, and then 2 months later you look back and go, that was completely wrong. So I think it's very premature to say exactly what's going on. Clearly, there's some delevering going on among hedge funds in levered trades and things like that. It's also, again, it's the markets processing historically unique developments, and with great uncertainty, and I think you'll probably see continued volatility. But I wouldn't.
We could turn it into a drinking game. Every time he says uncertainty, take a shot.
About exactly what's causing that. I would just say markets are orderly and they're functioning kind of as you would expect them to in this time of high uncertainty.
So the Fed, in its last meeting, slowed the pace of shrinking of its balance sheet. Was this driven by uncertainty about how much reserves and liquidity the market needed, and you wanted to take a little more time to find that out? And flip side, you said the market was orderly. What if market disruptions emerge? Would the Fed intervene?
So we think that reserves are still abundant. So we don't think we're close to the point, particularly close to the point where we would stop. But we were facing a situation in which, for other reasons, there were going to be big flows into and out of reserves as it had to do with the debt ceiling and the Treasury General Account. For those of you who are Treasury market people, that'll make sense. But while those big flows are happening for over a period of 6 months, we would actually be shielded from being able to see evidence that we were or were not getting close to the level of less abundant reserves. And so we decided to slow the pace. We thought about pausing, and instead we debated it. It was one of these great debates.
It's very
that we have at the
strategic
FOMC.
memo.
We decided to slow the pace.
He's a
instead.
master
And
with his
people
words.
really
He's
came to
very
see
good
the
at
merits
saying
of
a
that
lot, but
because,
saying nothing.
the slower we go, the less the smaller the balance sheet can get without disruptions. And we want that process to continue, and now it's at quite a slow pace. So we think that's a really good thing. So that means it can go on for a longer amount of time, and we'll be able to reach kind of very carefully what we think is the right level of reserves. Still plenty of reserves.
Doesn't
What
get more
about the
neutral than that.
international dollar-based system? With all these disruptions, do you stand ready to supply dollars to central banks as you've done in the past when there's been
You're
a
gonna
global
pump markets?
shortage of
Come on,
dollars?
pump
Sure,
them.
absolutely we do. Just,
Yeah,
just
buddy.
for everyone's knowledge, we have standing dollar swap lines with 5
They're
large
ready to
central
pump the
banks,
markets.
and they go to the jurisdictions where there are big overseas dollar funding markets. And in effect, those are overseas markets.
That should
where,
cause a little
for
pump.
example,
Yeah.
a European
Getting a little
or
green
Asian
candle there.
institution
I knew that would
is
do it.
buying an asset-backed
They've got
security
money ready
that is
to pump
backed
the
by
banks.
loans to American consumers. So in effect, these are loans to American consumers. And we support that. We want to make sure that dollars are available. They need dollar funding to hold those dollar assets. So the way it works is, when needed, we lend to the
Papa
central
Powell's
bank
throwing us a
in
bone.
dollars, and they pay us back in dollars. They then pay in their currency. They lend on in dollars. And
What's
so we
up? I
take
know
no
that guy.
credit
Thanks
risk or
for
anything like
popping
that.
in.
And it
Hope you're having a
supports
good day.
dollar funding markets. Dollar funding markets are very sensitive during times of crisis, and it's very helpful. The reason we do it is it's really
We're currently
good
listening
for
to the
US,
crusher of
consumers.
markets and see what he has
We'll
to
continue
say.
to do that, just as part of the dollar being a reserve currency, the reserve currency, most important, and we will do that.
You mentioned amongst the issues you were focused on was the U.S. fiscal situation. Well, clearly, U.S. sovereign debt continues to rise. And what are your thoughts on the longer-term implications for interest rates and economic stability? How much further can we go in terms of national debt before we cross a line that might be unsustainable in the long term?
I think our debt's already unsustainable.
U.S. federal debt is on an unsustainable
Yeah.
path. It's not at an unsustainable level.
Yes, it is.
And no one really knows how much further we can go. Other countries over time have gone much farther, but we're now, we're running very large deficits at full employment. And this is a
Let's just look
situation
at this
that we
because it's
very
hilarious.
much need to address. Sooner or later we'll have to, and sooner is better than later. In terms of, if I can say
$36
from
trillion.
my time working on these issues, it's not the Fed's issue, but if you look at a pie chart of federal spending, the biggest parts and the parts that are growing are Medicare, Medicaid, Social Security, and now interest payments. And so that's really where the work has to be done. And those are issues that can only be touched on a bipartisan basis. Neither party can.
Our total
figure out
debt
what to
is
do without
$103
both
trillion.
parties being at the table.
How does
So
that make you
that's critical.
It's crazy.
All of
I was trying to see
domestic
if they would break it down by
discretionary spending, which
categories,
is
but-
essentially where 100% of the conversation is small as a percentage of federal spending and is declining it's already declining as a percentage of federal spending. So when people are focusing on cutting domestic spending, they're not actually working on the problem. Domestic discretionary spending is already going down. I like to make that point because so much of the dialogue that the politicians offer is about domestic discretionary spending, which is not the issue.
Well, let's turn to stability and regulation. Turning to the U.S. financial sector,
We're recovering a little
we
bit,
still have some concerns about
mostly because he's
distressed
lying and
commercial
saying
real
our debt is
estate loans
sustainable.
on
But
bank balance
whatever.
sheets, whether they've been fully dealt with so
And he's
far.
ready to pump the markets.
In some sense that they haven't. Add to that the very rapid growth in various forms of private credit over the last few years, which arguably haven't been tested by a full-blown recession. How would you put the resilience of our financial institutions at this point and their ability to weather potentially uncertain times?
So I think our banking system is well capitalized with liquidity and is quite resilient right now to the kinds of shocks that it may face. I do believe that. In terms of the commercial real estate, there are, and this has been the case, really we've been working on this for 4 or 5 years now. There are some banks, it's mostly medium and small size banks who have elevated concentrations of commercial real estate, some of it troubled, and we've been working to make sure that those banks have a plan, have capital, and can absorb the losses that they're doing. So, and that's been going on for some time. The very largest banks don't tend to have high concentrations, so this is a problem that we have known would take years to work through, but we're really well into the process of working through it. In terms of the non-bank financial sector, it's grown enormously. The provision of credit by non-banks has grown just really fast. Most of it has been funded, though, with a private equity-like structure where it's
Bitcoin's
limited
pumping up
partners
again.
who are
Come on.
signed up for 10 years to a general partner to invest that money.
Powell
They're
crushed
not
us. Powell has to
depositors who
revive
can
us.
run.
Those are the
You know,
rules.
Your money's committed. And so that funding model is kind of run-proof. That isn't some law of nature, though. So when you do start to see shorter-term funding creeping in, to your point, though, Raghu, this very fast-growing and now quite large private credit part of the economy has not really been through a significant credit event or significant. It's really grown since the pandemic, and so just for that reason and for how fast it's growing, we have a close eye on it. It doesn't have the same kind of prudential regulation, though, that the banking system has. So we're watching it carefully. And as I mentioned, it's.
I feel like that's
more
what
stable
Powell's
funding
always
source to
doing.
the
He's just
extent
watching
its
things
institutional
carefully.
investors
I don't know if
signed
he
up
ever
for a
actually
long
does
period.
anything.
But we're
He's
watching
just always
carefully.
watching
Right,
to see
wearing
what he
my,
should do.
Banking research hat. Actually, banks are also involved in
That's
funding
right.
these institutions in a big way.
Yeah.
We do know the administration wants to relax regulations in many areas, one of which may well be banking. What can you tell us about the Basel III endgame, so to speak, which is, at this point, primarily focused on additional capital for the large banks?
The Fed view, and my view, is that we should proceed to complete the Basel III accord.
Watching like a hawk, talking
we
like a
would have
dove.
to do that,
Yeah.
and we look forward to doing that in conjunction with the FDIC and the OCC. But our view is, and I think the bank's view as well, is we should complete that. You need international minimum standards. That's kind of a common good, and we're not bound by them. Really, nothing. The United States has plenty of input into what those accords contain. So our view is strongly that we should complete those, and we could do it, I think, relatively quickly. We're not so very far away from what would be a good, I think, outcome.
Well, let me move to something which is more about technological change and new kinds of instruments, cryptocurrencies.
There you go.
How do you
Cryptocurrencies.
see the potential for more favorable regulations coming on them and
Pump us.
potential risks from that for the system?
So we went through a wave of failures and fraud and things like that were the headlines for a couple of years. And I think what you see now is, and during that period, by the way, we worked with Congress to try to get a legal framework for stable coins, which would have been a nice place to start. We were not successful. I think that the climate is
failed
changing,
miserably.
and you're moving into sort of more mainstreaming of that whole sector. So Congress is again looking at both the Senate and the House are looking at a legal framework for stable coins. Depending on what's in it, that's a good idea. We need that. There isn't one now. And stable coins are a digital product that could actually have fairly wide appeal and should contain consumer protections of the typical sorts and transparency. And that's what the Senate and the House are working on. So that's a positive thing. I also think some of the, we took a pretty conservative, and other bank regulators took an even more conservative perspective on the guidance and rules we imposed on banks. I think there'll be some loosening of that, and I
don't
we'll
think he's
try
going to
do it
say
in a
any
way
crypto
that
other than
preserves
stable
safety and
coins.
soundness, but that permits and fosters appropriate innovation, but that does so in a way that again doesn't put consumers at risk in ways they don't understand or make banks less safe and sound.
Hey, but his favorable
you have a
opinion of
policy
stable
review
coins
underway.
did pump the market. So
Now,
stable coins to the moon, boys. Let's go.
Recently tell us there seems to be a distinction between a rise in the level of prices, which is what the public seems to worry a lot about, and the rate of increase in prices, which certainly they worry about in passing, but the Fed worries much more about. That is the rate of inflation. So even though we're coming down to 2%, people remember that over the last few years, it's been over
Powell's a
20%
stablecoin bag holder for
increase
sure.
in prices. So as you start thinking about the policy review, is there any thought about how you might want to address this sort of challenge that it's the path of prices as much as the rate of change which matters?
First of all, I think you're right, and I think the public is right. When we say inflation is back down to 2%, 2.5%, and we think that's a good thing, it is a good thing. But if you're paying 20% more than you were paying in 2021, that doesn't help you much. You're still paying a lot more than you used to be paying for the necessities of life. So it's just another way of saying people hate inflation, and
Of course people hate
it's
inflation.
easy to understand why. All we can really control is a world in which, in the world we're living in, prices don't go down in the aggregate except in extreme times that we don't want to court. So I don't think we couldn't have a framework where we're going to bring prices down by 10% or something. That's not something we'll be looking at. We're essentially looking at the best way to foster 2% inflation over time. And the things we did back in, the changes we made in 2020 were really innovations around what to do when you're stuck near zero. Now we're well above zero, and it may be that we still need to have in our framework a way to deal with that, but perhaps the main case is not one where you're dealing with the effective lower bound, and that would be a framework that looks a lot more like the one that we had before 2020.
Now, one of the tools you
But
brought
they've
in
got to
to
spend
deal
some
with
time,
zero
assess the
lower bound was
situation.
quantitative easing. But you've also used quantitative easing to fix disruptions in the financial markets. Are you going to be more specific about what your objective is with quantitative easing as you go through this review?
So in the beginning, it's typically
Abolish
we're
income
using it
tax.
for
I'm with
financial
it.
market
I don't see it
functions.
happening,
That was
but I'm
the
with
case
it.
with the global financial crisis and with the pandemic. And we did try to explain ourselves through the pandemic, and our explanations did change. But I think it's fair to say we might have done a better job of being clear about why we were doing, and that's something that we're aware of and looking at.
Oh, Powell's realizing he's not often
no,
very clear.
Discussion is complete without talking about AI.
Yeah.
With AI coming fast and furious, it could affect.
Mark Anthony, what's going on,
productivity,
man? Long
it could
time no
affect
see. Is everyone else getting
employment.
notifications
There's
when I
some
come
people
on
who
because you
say
don't
we
and
will
you're not
see
sure
for the
why?
first time technological unemployment in a
You
serious
should
way
be.
with
If you've
AI.
got that
What are your
notification
thoughts
bell
about
ticked, you
it,
should be getting
and
notifications.
how will it impact the Fed going forward?
So like
But
everyone
nobody
who's
said
been
anything to me
exposed
about
to
it.
what it's capable of, it's beyond. I started thinking about it as like a better version of Google, but it's not. It's like a better version of a person, it can do amazing things, and so the question is,
just in,
all
Powell hates
through the
people who
250
likes AI
years
more.
of technological innovation, technology evolves and people worry that it's going to replace human labor and people will be unemployed, and that hasn't been the case. It may be the case in the short run, but in the long run, what it's done is raise human productivity and therefore living standards. So is this going to be the case where it eliminates more jobs than it creates? And we just don't know. You come back in 20 years, will it be the case that just people are much more productive in their work because of AI? Or will it be the case that AI has just replaced a lot of people? And I think it's very hard to say, but it truly
it'll be a
is
mixture.
remarkable in what it's capable of. And it's, we had
Bitcoin's climbing
we had a
back. That was an easy
demonstration
buy
by
right there,
a
honestly.
Wharton professor recently, and
That was an easy buy.
You speak to it like it's a person, and it kind of responds like a person, and the things that it can do are really amazing. By the way, this is early days. They're talking about even the next couple of years will bring more dramatic breakthroughs. So I think it's one of the 2 or 3 things most likely to bring dramatic change to the economy all around the world in the next 20 years. And I'd say very hard to say how it shakes out.
Let me turn to your job. An important man once said of your job, it's the greatest job in government. You show up to office once a month and you say, let's see, flip a coin. And then everybody talks about you like you're a god.
This is true about Powell.
What is it that you normally do every day in the office? Is it fulfilling and, dare I say, enjoyable? And do you really feel like a god?
So I would agree. I think it's the best job in government. I would agree. I really do enjoy it. Yes, I love the job. It's a great honor to serve. It's quite humbling because everybody makes mistakes. It's just the economy is just not very predictable. All of that is true, and I do what everybody expects me to do. I read. We do a little more reading though as part of our daily. My colleagues and I do part of our daily regime.
I bet that's like
than a
all
typical
Powell does is read.
Executive would do. In terms of being a god, I would say that we are blessed with a large number of amply compensated critics who would kind of tend to undercut that. So we don't feel like a god.
He's talking about Trump there. Shots fired.
So let
Trump
me
wants
go
to come
the
for
more
his job. He's going to come
mundane.
for
In
his
that
head.
Office. What are the key indicators you look for? What are the sources of data that you go to as you try and make up your mind?
So I'd say start with labor. There's more labor market data and better reliable labor market data than probably anywhere else, and it's just a lot of data. And it's new jobs, it's payroll, it's wages, it's participation. You can break all of those down in different categories. It's a million different things. So there's a lot of labor market data. It's a great field if you're going into economics because there's just so much to do. So and then we look at the inflation data. Also, I keep track of global developments pretty carefully, and I talk to my global counterparts pretty regularly just to stay aware of what's going on.
What
Financial
Powell
markets
does
are
impacts
really important,
everybody
and-
else in the
and
world,
lately
so I
something
would hope
that's-
he's
that
paying attention.
We're paying close attention to, as you would expect, what's going on around the world in currency markets, in fixed income markets, in equity markets.
That sounds like a
all of
huge
that.
part of the job
For me,
description,
though,
not
my
something that he's
background
like
was more
also
in the
just
private
happening to
sector
do
and,
because
as
he
an
cares.
investor,
So that should be a
and
major part of the
for a
job
significant
description.
part of my career, and I have to talk to outsiders about what they're seeing and what they're dealing with for it to really kind of fit together for me. I can look at only so much data, and but to really get the story and the narrative, it's more talking to outsiders, and anecdotal data does help things kind of fit together for me, I would say.
Yeah, you told us about speaking with business people last night and getting a sense of what was going on in the Midwest. Let me turn to Fed independence. You've reiterated that you intend to stay in office until the end of your term. And that's certainly
Burning
reassured
question.
many in financial markets. What are the levers the government or the legislature have to pressure the Fed? And should one worry about threats to the Fed's independence once you're gone?
So our independence is a matter of law. Congress has, in our statute, we're not removable except for cause. We serve very long terms, seemingly endless terms. So we're protected in the law. So Congress could change that law, but I don't think there's any danger of that.
I bet Powell would be a
Fed
good guy to
independence
have a
has
beer with.
Pretty broad support,
Honestly.
across both political parties and in both sides of the hill. So I think that's not a problem. There's a Supreme Court case people will have read probably in today's journal at which the Supreme Court may decide whether independent agencies generally, whether their authorizing laws can contain a provision that prevents the president from firing members of a commission other than for cause. And that's a case that people are talking about a lot. I don't think that decision will apply to the Fed, but I don't know. It's a situation that we're monitoring carefully. Generally speaking, Fed independence is very widely understood and supported in Washington, in Congress, where it really matters.
Powell gets to work
the
for
point
basically
is
ever.
We can make
That's
our
what it
decisions,
is.
and we will only make our decisions based on our best thinking, based on our best analysis of the data about what is the way to achieve our dual mandate goals as we can to best serve the American people. That's the only thing we're ever going to do. We're never going to be influenced by any political pressure. People can say whatever they want. That's fine. That's not a problem. But we will do what we do strictly without consideration of political or any other extraneous factors.
So what Powell's saying there is he doesn't give an F what Trump says to him. He's standing his ground and says he does not care. So we can take that a couple different ways.
Well, I have time for one more question. I know the question that's on all your minds. What are you going to do on interest rates next? But I'm not sure that you know, and I'm not sure you would tell even if you knew. So I'm not going to ask that question. The question I want to ask is a more personal one. What is it that you'd like to do most at home after an exhausting day flipping coins in the office?
He probably likes to bathe in the tier of
I play
traders.
one of my guitars. I do Zoom calls with my kids and my grandkids, and I go to the gym a lot too, just to stay in shape.
We
All
need
those
you
things.
healthy. We need you healthy. Thank you very much, Chair
Thank
Powell.
you. Thank you.
And please
Hey.
join me.
I'll try and do it. I know that guy. He just said he loves to hop on Zoom calls, so maybe he'll hop on a Zoom call with me, and we can talk about how he crushes markets around the world for fun.
On behalf of the Economic Club of Chicago, thank you, Chair Powell and Dr. Rajan.
All right, that's enough of them. That's enough of them. We basically know what's going on. They're not going to talk anymore. Let me see here. So basically, Powell did have a pretty dovish stance when it came to the tariffs. He's not a fan of them. Too much uncertainty. Way harsher than he expected. And yeah, he's got to wait for that to play out, kind of settle down, for countries to come to terms with each other and kind of decide how that goes. However, he did state that the Fed does have money on the side to provide central banks and banks in case they end up needing it. And that would be that liquidity injection that we've been talking about. Obviously, we are getting out of quantitative tightening and into quantitative easing, but it's not fully there yet. We need rates to be cut and things like that first to fully enter that, but we have stopped our tightening. So that's good. Pretty bullish that he said that they're ready to put money in. I mean, it's not good for things necessarily, but it's good for markets, definitely. What else was good is that he is actually a supporter of the stablecoin bill. He wishes that it was resolved before, and he wants more favorable regulations for crypto. It's not often that Powell actually talks about crypto, so that was a little bit surprising, especially in favorable terms. But overall, I think that the markets reacted a little harsher than they should have. I think all those responses were very expected, especially considering the state of things around the world and the state of the tariffs. So I think the markets, especially Bitcoin, did react a little bit harsher than needed. Let's see, I can pull up the price here. We did have, let me see, looks like we're missing half the screen there. There we go. We did have a decent little fall down to about 83.2, and then it popped back up to 84.1 currently. And we're going to, right now, we're actually getting a little green buy there. So some positive volumes coming in. We see a spike in RSI. Let's check the 4-hour chart. We should still be above that EMA. Nope, we're just, yeah, we're above it. We tagged it and bounced off it. We've got this 50-day that we're still trying to cross, though. Overall, not too bad. Does Powell speak again before May 6th to 7th? Yes, yeah. Let me grab the link. Let me grab the link. Can certainly check if he speaks like in the next 2 weeks or so. Can definitely check that. They don't always come out super far in advance, but if it's in the next 2 weeks here, we should be able to see. So Wednesday, that's him speaking there. Michael Barr, Mary Daly, Harker, Austin, Bostic. Well, it looks like he may not speak. I mean, at least until the last week of April, maybe he'll speak. But for the next week, he will not be speaking. And all these other Fed presidents really don't have an impact on the market, so not too concerned about them, really. All that really matters is Powell. But this currently does not go out further. Let's see. Do you guys like that I stream these? Do you want me to stream these more often when they come up? Or is it kind of a snooze fest? How much do you care? I'll keep doing them if you guys want to keep joining them. This is another place that we can look to see if there's any upcoming speeches. So, view the month. Let's watch Powell only. I'm going to stop talking about crypto, period, and I'm only going to talk about Powell. That's it. You've got it. Okay, so here's Friday. Then we got May. Yeah, Powell's not going to speak until FOMC again. That's it. That's basically it. Unless something comes up. But currently, that is all that's listed. He will not be speaking until then. But yeah, let me know in the comments if you guys like when I do these, stream the Fed speakers or major events that could impact the crypto market. I'll keep doing them if you guys keep liking them. So just let me know in the comments down below. Otherwise, I'm going to go ahead and let you guys go. It was fun hanging out with you guys for the speech, but some good jokes, some good times. Thanks, Memo, Maru, Chester, Cass with the Sass. I know that guy, Ryoshi, all you guys that tuned in. Appreciate all of you. I will be streaming again tomorrow at 7:30 a.m. Central Time. I'll see if I can get it working on Arena. If not, I will definitely be here on YouTube. So smash up the like, subscribe to the channel if you like what you saw, and I'll catch you next time. Peace.